Hi guys and welcome back to Yashi. Today with another video like the one we did last month. We're gonna talk about inflation. Normally what I try to do is I try to make some videos looking at trends with the CPI report that the government releases to kind of predict or forecast or at least try to what happens in the future. Now, I made already two different videos about this, one in December and one in November of last year, and we went pretty close. The predictions we made or the trends we then saw reflected in the CPI report. Sometimes it was immediately on the CPI report after the report I made. Sometimes it would take another extra month for us to see that data reflected on the CPI report, which is the government inflation report. So let's get started. We're gonna start today with the government, let's say, based CPI report. This one here that we're seeing right now is the one from November. The December one will be released on January 12, 13, something like that. And but this is a good starting point on which then we can check out the data, the more, let's say, recent data from other data sources that we can think and see and add to the forecast of the December and the January CPI report. So inflation on all items on November was 7.1%. If we do not consider gasoline, on the other hand, inflation was at 6%. However, for the first time in the whole year, we saw the trend starting to revert because energy is starting to drop faster and getting close to the 2021 levels. So this is our starting point, 7%. The forecast, what do we expect to happen on the next CPI report, on the next two CPI reports, so December of 2022 and January of 2021. So let's start with energy. Although energy is not what is being looked at as much by the Federal Reserve, still has some effect on pretty much all other items on inflation, because energy is part of transportation, energy is part of food with fertilizers and stuff. For example, petrol makes a lot of those fertilizers. So it is important, even if it is not considered directly by the Federal Reserve. We're gonna start with gas prices. We know that for the first time on 2022, gas prices are now lower than 2021. The current average on regular is 3.228, and this is AAA, the data I'm receiving, which is pretty accurate. While 1 year ago, the prices were at 3.28. So we are at the same level, a little bit lower than last year. Mid-grade the same. Premium is the only one that is above 2021 level, but only by 3 cents. The only problem, which is the one that influences the most, let's say, other factors in inflation, like for example, transportation, is diesel. We are still in high demand for not additive, but certain types of petrol to create diesel, and this is why diesel is much higher compared to last year, and this will affect other factors, like for example, transportation. We're gonna go now on to general energy prices. This one here is just the energy prices, not gas, not gasoline. This is energy prices here. We know that in November, we finally started dropping compared to the month before, October. The question is, will this trend continue? Will the energy prices continue to drop throughout December and January inflation reports? I don't have a lot of data about this one, but the trend is finally starting to revert. If you look at November data here, October and November data, we see that October was a higher level, November is starting to drop, but we're still above 2021 levels. So inflation is slowing, but it's not deflating yet. Natural gas, in this case, natural gas went to an all-time high for a year around August, then started dropping. It's now at half compared to the August levels. However, how is it compared to last year? If we look at December of 2021, $4, we are actually under the levels of 2021, so compared to 1 year ago in terms of prices for natural gas, which is responsible for heating, energy and stuff, which is a good news. We're seeing an inversion of trend in natural gas. Instead of having a slowing inflation, we now have deflation. This will affect the CPI report if the trend continues. We're gonna go now on to food prices. Food prices were one of the biggest contributors on the CPI report. If I go on food here, 10% inflation on food. So where are we on food right now? I don't have too much data on this again, as some other factors you will see now in the next couple of minutes. January of 2022, the index was at 135. November of 2022, the index is at the same level. So we are getting closer to where we were a year ago. Is it 10%? Is it less? I don't know. Let me go on a 5-year trend. If I go around the end of 2021, the trend was at 125. Now it's 135. So the trend is inverting. We're seeing a slowing down in inflation, but we're not seeing deflation yet in the food prices. If the trend continues, although I don't see a continuing downtrend here, I see more of a plateauing, but if the trend continues, we might see food prices coming back to the levels of last year, which is a big hope, as food is one of the major things we need to survive. Let's go now on shelter. If we look at the CPI report, we're gonna go on all items, services, we're gonna go on shelter. Shelter contributed at 7.1% of inflation on the November report. If we look at Redfin, we have some more up-to-date data, not really. So we know that home prices slowed down their pace of growth. We saw home prices grow a good 15% towards May, but then they started dropping. Now, of course, you have the people saying there's a crisis. If you look at the year-over-year data, on the other hand, it's not a crisis. It's simply now a more natural growth. On average, the home market grows 3%. And if you look at Redfin data, the home market increased by 2.6%. So we're going back to that more natural level of growth by real estate. The question is, will the pace remain this way? Will it go up? Will it go down? If you look at some other, let's say, updates I make specific in real estate, I believe that the home prices will start growing up again once demand will come back onto the market. But this is another video. We're gonna talk also about the second biggest contributor of shelter, which is rents. Now, for the first time in 7 years, the rent index dropped. Not a lot, but it dropped by 0.4%. So we're seeing an inversion of the growing trend of rents, maybe because they got so high they're not sustainable anymore, especially in some of the more expensive cities. So when I say 0.4%, I'm talking about month-of-the-month change. So if over the year rents increased 10%, then now year-over-year increased by 9.6%. So slow down in the pace of growth, but there still is a lot of growth. So the effect on a CPI report will not be as strong as other factors. Now, one factor, on the other hand, that really will affect the CPI report, and already started to affect the CPI report, and I can go on transportation here. Transportation in November was more expensive by 14%. However, I believe that between December and January, it will start having, the changes will start having a lot more effect on the CPI report. One of them is freight shipping costs. Shipping a container from China to America used to cost around $10,000. And this was in September of 2021, as well as pretty much February, March, April of 2022. The price now is around 2,246. We're not at the levels of 2020, where it was around 1,500, but it is still a 75% drop compared to last year. And this will have effects on the CPI report, because 75% drop is a lot. It will have their effects. It's gonna go on another commodity here, used car prices. We saw in 2022 and 2021 a gigantic increase in used cars and new cars. We got to a point where used cars used to be more expensive than new cars. You could trade in your car and get a new car almost for free. Some of you took care of the deal, had an amazing deal. Some people got wrecked about this, because if you really needed a car and you didn't own one, buying one was very expensive for you. However, prices are now starting to drop again. If we look at year-over-year data by Car Gurus, and this is December data, the price index dropped 3.4%. So, if we look at November data, this is not year-over-year, unfortunately. It's only December to December. If we look at the CPI report, and we look at all items, commodities, new vehicles, used trucks, new vehicles are still up 7%. Used vehicles started to drop. I cannot see this. Why can't I see this? By how much? Let me see here. They dropped 3%, which is matching the data that I see here. Actually, no. We might see a bigger drop for December. Car Gurus is saying 3.4%, which matches the CPI report, but the effect might be even stronger throughout January. Why? We're having companies like Carvana being in a critical situation where they need to deplete some inventory, which will flood the inventory of used cars, which will make used cars cheaper. That is my prediction, not financial advice. Another thing, apparel. Cotton price has dropped 47% compared to the all-time high of this year, which will affect, say, the raw material cost of apparel companies, which can enable them to drop prices. Of course, it's on them whether they want to drop prices or not. Fact is, if they won't drop prices, their profits will increase. If they will drop prices, they still will make a lot of profits because their underlying costs dropped a lot. Last but not least, airline fares. Airline fares were extremely expensive throughout 2022, probably because airlines were trying to recover some of the losses they made throughout the pandemic as people were not flying. So we saw a gigantic spike in prices in 2022. However, if you look at, let's say this is a ratio, this is an index. The index is starting to get back to the 2021 levels. Here the ratio is 211. Right now we are around 280, so we still have a long way to go. But if you look at the trend is going down. It stopped for a second, but it's going down again. Probably people are not buying as many fares again. Gas prices are dropping a lot. They're going back onto 2021 levels, giving, say, airlines more margin to drop prices and incentivize consumption. Generally speaking, most of the factors that make up the CPI report seems to be decreasing, seems to have been decreasing, and seems to be some of them starting to have effect on the CPI. A good example was used car prices, which already have been calculated into the CPI report of last month, actually last 2 months, because November. So will this stuff start to kick in into the CPI report? Yes, some data trends we already talked about in November, for example, the freight rates, and they slowly started taking effect onto the CPI report. I believe that on the December and January report, freight rates, for example, will hit even harder, maybe leading us to not only a slowdown in inflation, but in some cases a deflation in prices. Housing is still very expensive. Gas prices, on the other hand, might lead to a deflation on the December report. And if the trend continues, might even kick in also for 2023. We are seeing slowdown. Slowdown in consumption, we're seeing slowdown in prices. I believe we might come to not only the inflation that the Federal Reserve is trying to achieve, but even deflation over 2023. This is a very hardcore prediction. But the data is changing at a faster pace than what economists were predicting or saying. Again, guys, this is not financial advice. This is simply me observing data points I'm seeing here. And the data seems to be very good. The only thing that seems to be better, and I'm happy about it, but I don't want to say I told you so, but I told you so, is housing. Rents might be dropping because we have a high influx of new rental homes. Hedge funds are buying up entire neighborhoods. They're building up entire rental homes. However, home prices are pretty stable because there's no inventory. This will be another video, but the general theory is still holding pretty strong. Guys, let me know what you think. Thank you for watching, and ciao.